Right, good morning then everyone on Monday the 19th of June. We are going to have a new little series, kind of a European market rundown, US market rundown. We're going to try to keep up to date with these videos on a daily basis for our social media channels and students. So we'll start with the news, flick across the headline, jump across to some markets, see what's going on across the markets, and have a bit of a look at the economic calendar as well. But we'll just start with the news across Reuters. You can see Asian stocks pause rally eyeing China stimulus and Powell testimony. What that says to me is there's not really a great deal of information out over the course of the weekend and into this week. We obviously had all the central banks last week. Markets reacted positively to the central banks last week. We saw some solid upside and trends continue across US stocks, and the downtrend continue across the US dollar. So into today, it's really not a surprise. We've had a bit of a pullback. We've had a strong risk on week last week. We then come into this week with a bit of a negative start to the day, bit of a risk off start to the day, or start to the week, which is not to be unexpected. I mean, markets do not continue in a straight line forever. You do get ebbs and flows, push-ups and pullbacks and all that sort of stuff. So in fact, the markets have pulled back is absolutely no surprise. We'll jump across some charts and you can see it's just a minor pullback as of now. But the Chinese had a meeting on Friday in order to kind of increase stimulus for the economy, which did not prove fruitful, unfortunately. Goldman Sachs did downgrade growth expectations for the Chinese economy, and that's what they're battling with at the moment. China, they are battling with expectations for growth to be a little bit more negative, kind of struggle for growth going a little bit going forward, or a little bit more than they had anticipated going forward, and then with loosening monetary policy in order to lend support to the economy. So they're kind of battling between that. There is obviously political constraints in that country when coming around to increasing support for the economy. They got to run things by the government and stuff, so a little bit more difficult in terms of that country rather than say the US or the Eurozone, entirely up to the central bank then. So the fact that they did not come to some sort of an agreement on Friday, markets have taken as a slight bit of a negative to sell off into this morning. But Asian markets slightly lower. It was not exactly a major massacre. We've got bank holiday in the US today, Juneteenth, so volume and liquidity likely to be a little bit lower later on. That's probably maybe potentially a reason for some downside. Bit of profit taking after a strong aggressive upside week last week, and then that is no surprise. We are seeing a bit of a little bit of a pullback, but dollar makes minuscule gains as traders weigh rate paths ahead. The US central bank did come out and suggest to us last week that they're going to hike interest rates more than what markets are currently pricing in. They're expecting a further 50 basis points worth of hikes over the course of this year or until year end, but markets currently price a 70% chance of a hike in July. After that, they are expecting the central bank to go on pause, so anything past that still yet to be priced in by markets. But apart from that, you can see across the headlines, across the news sources, there's not a massive amount of information that we can look at, or things that we can take. You say oil slides more than $1 on China growth uncertainties, which is a bunch of articles talking about similar type of things. You got cryptocurrencies being talked about here. Outcome of Blinken visit. Does Blinken meet the president? But what does that happen? Like, what comes off the back of that? I would say nothing. I mean, it's just something to talk about. So yeah, in terms of fresh information, fresh headlines, not really a great deal of information we can look at to take off of these news sources. We'll have to have a look over the course of today, see if we could find any opportunities. But as of now, bit of a pullback off the back of last week. Probably have to still sit on the side of the fence of last week. But we'll come across to the monitor, have a look at what's up, what's down. You can see equity futures under a slight bit of pressure, but they're still pretty flat percentage change, 0.03, 0.1, 0.08, 0.19. European equities are down 0.5%, kind of across the board. Asia Pacific equities slightly lower. Commodities also slightly lower as well. But you can see performance year to date, 3-month performance, month to date, and 1 week performance. You've had a solid upside across the board on stock indexes over the course of this year so far. A bit of a pullback after another solid performance last week. Really not too surprising at all, right? come into commodities again. Commodities, slightly lower, but again, we had such a strong positive risk on week last week. To see a slight bit of downside, there's nothing too severe. Bond yields a bit mixed, US dollar a bit mixed, as you can see as you head into the US bank holiday later on today. I say later on today, it's today, it's obviously just a bit earlier for them over that side of the world. The Australian dollar negative across the board, not unsurprising with stock indexes lower across the board. You can see Kiwi as well lower. Canadian dollar slightly mixed, so again, it's no kind of surprise that these currencies are not performing well over the course of today. You look at euro, you look at sterling, a bit choppy. Sterling's definitely one to keep an eye on. Cable's one to keep an eye on over the course of cable's definitely one to keep an eye on over the course of today. Over the course of this week, with the Bank of England out later on this week, but that is something we will cover a little bit later on today. Japanese yen strong across the board. We can see performance across the Japanese yen year to date, 3-month performance, month to date performance, just been a massacre across the Japanese yen over the course of this year so far, which is not unexpected. Sorry, you got other central banks, all the G8 central banks across the board raising interest rates. Even the SNB, the Swiss National Bank, have got involved with hiking interest rates. And then you come around to the Bank of Japan, and the Bank of Japan are just doing nothing. They did alter it slightly and raise the band for the target range for the 10-year yield slightly a few months back, but they've got yield curve control in place. They still got interest rates at negative. Negative interest rates, and they continue to do QE and provide support to the economy that way. So they purchase bonds whenever they go up the yields go past a certain level. So all around, the most dovish central bank of the G8 currencies. And as long as that remains in place, as long as they don't show any signs of hiking interest rates or removing yield curve control, you have to imagine that stays in place. And as the Japanese continue to provide or continue with ultra loose monetary policy, that is something that's likely to continue as long as the other central banks continue to hike interest rates. So Japanese yen, certainly one to keep an eye out on over the last few weeks. Definitely in the few weeks ahead as well. You can see stock indexes across the board have been trending higher. Yesterday, you can see the S&P, Nasdaq, the S&P, the Dow Jones, the Nasdaq, and the Russell. Russell slightly sideways over the course of last week, but certainly over the S&P, the Dow, and the Nasdaq trending higher. You can see the DAX, the FTSE, the Nikkei, all sustaining solid upside over the course of last week. You can see a bit of a pullback across the board in stock indexes though this morning off the back of what we were talking about slightly a bit earlier. But you can see the couple of double tops across the S&P, Dow Jones, the Nasdaq, providing us with a bit of downside, or helping to provide us a bit of downside. The DAX, the FTSE, the Nikkei, all lower across the board to start the trading session today. But has anything really changed from last week? No, there's no significant fundamental drivers of this move lower. So that would suggest to me maybe there's potential to continue to buy off the back of last week's sentiment. But obviously those moves don't last forever, but you'd rather continue to buy on these uptrends. And once you get that reversal, you do get that pullback, that's then when you would like to lose the trade. Obviously you don't like to lose a trade, but you'd rather keep buying in the uptrend and just get nailed on the one that does in fact turn around. So otherwise, US dollar continues to trend lower over the course of last week. You can see the Aussie, Kiwi, Euro and Sterling trending lower. You can see dollar Swiss, dollar CAD, the dollar index trending lower. Dollar yen's the odd one out with a bit of Japanese yen weakness. Not to be surprised after what we talked about last week. Central banks hiking interest rates wherever you look. Bank of Japan are not one of those central banks. And that is sort of where we are looking at. US dollar continues to be put under pressure. Does that continue? We'll have to see. Markets have slightly reversed, but I still think another punt to the top side is not the worst idea in the world. But what you got to keep an eye on, I think, is these things across here. You can see the 10-year yield not open for trading at the moment. It is a bank holiday in the US, but certainly we've got this ascending triangle on bonds at the moment. You can see higher lows, building all the way up to a flat top across the top. If you can have a pop up through that, up through 3850, or 3.85%. If you can pop up through that, that is likely to prove supportive for the dollar, likely to prove negative for stocks. I think is a level worth keeping an eye on. As long as that trend line holds, you'd have to imagine it will make an attempt at those highs at some point, especially if bets for rate increases decide to grow, markets decide to price in those hikes that the Fed said that they were going to do. As markets price that in, this then pushes higher. If we can get through 3.85%, that should have implications across the board. Positive for US dollar, potentially some negative for stocks, definitely negative for the Japanese yen as the yield differentials continue to widen. As this pushes higher, and as the Japanese 10-year yield remains at the same level, yield differentials would cause dollar yen to continue higher. So something worth keeping an eye on in the coming days and weeks, certainly over the course of this week. If you can pop up through that, that would be ideal. That would be a good trade to take over the course of this week. We could see not a great deal out on the economic calendar over the course of today. No high impact data. What you can see, or what I would probably recommend looking at, is this PPI when you come around to Canada, with the central bank hiking interest rates not last week, the week before, unexpectedly, opening the door for some for potential for more interest rate hikes to come. I think if you keep an eye on that PPI figure, as inflation is the driver of interest rates and monetary policy at the moment, keep an eye on that PPI. That is producer price index, which is obviously the inflation for the producer, the cost of producing goods. That again is inflation figures. You can see consensus for 1.4, the month over month figure. My previous is minus 0.2. Year over year figure, previous minus 3.5, consensus minus 5.8. Again, if you get some positive figures in terms of month over month figure, that can, if that turns around and pushes back higher again from last month, something definitely worth keeping an eye on. But apart from that, bank holiday in the US, not a great deal out on the calendar. Might be a bit of a quiet day as we head into today's European and US sessions. But anyways, we'll update a little bit more on that as we come on around to it a little bit later on. But yeah, best luck with the trading day, and I'll speak to you all again soon.